Wall Street wants you to sell in May and go away. But while the retail crowd is sitting on cash waiting for a crash that might never come, smart money is quietly loading up on 3 specific tickers. Look, if you missed the 40% run on Nvidia at $400, you cannot afford to be late again. Not with what's happening in the next 5 trading days. Today, I'm breaking down the only 3 stocks you need to watch before the market opens on Monday. Not 10, not 20, 3, 1 cash flow monster, 1 high, octane AI play, and 1 hidden gem that Wall Street hasn't even tweeted about yet. I spend dozens of hours every week digging through boring SEC filings, FA 10, QS insider transaction reports, institutional holdings FA so you don't have to. If you're tired of being exit liquidity for the big banks and you want data-driven picks instead of hype, hit that subscribe button right now. Join our community of smart investors. You'll get these updates while the opportunity is still on the table, FA not after the stock has already pumped. Buttons right there. Let's lock in. Stock number 1. FA. This one prints cash. Stock number 1 is Amazon. FA. AMZN. Everyone knows Amazon. But most people still think of it as an online store. That's the old narrative. The new narrative is this. AWS is accelerating again. And the retail margin story is finally real last quarter. AWS grew 17% year over year. But more importantly, the rate of deceleration stopped. And in May, we're expecting a fresh set of AI-related cloud commitments from enterprise clients. That's a direct catalyst. On the retail side, FA, for the first time in 3 years, FA Amazon is actually expanding margin. They cut logistics costs, optimized fulfillment, and stopped over, investing in warehouse capacity. The result, North American retail operating margin is now sitting above 5%. That doesn't sound huge, but for Amazon, that's a multi-billion-dollar swing. Technically, Amazon has been compressing inside a tightening range for 7 weeks. The 50-day moving average just crossed above the 200-day FA golden cross. The measured move from this base targets $220. That's about 18% upside from current levels. And we haven't even priced in a May catalyst now. Here's what I really want to know. Most people think this move is already priced in FA, but they're ignoring the massive institutional accumulation happening in the dark pools. I want to check the pulse of this room. Are you currently holding this stock, or are you waiting for a deeper dip? Let me know your entry price in the comments. I want to see who got the best deal FA and who's still on the sidelines. If you bought Amazon under $100 last year, respect. Type your number now. Stock number 2. FA. This one is not for the faint of heart. Stock number 2 is Palantir. FA PLTR. Love it or hate it. This is the purest AI software play on the public market right now. And the volatility here is insane. But the upside, even crazier. Let me give you the facts, not the tweets. Last quarter, Palantir grew us commercial revenue 54% year over year. That's not government money, FA. That's real businesses paying for their AIP platform. They've been GAAP profitable for 6 straight quarters. And their bootcamp strategy is creating a pipeline of customers that Wall Street is still underestimating. No, look at the price action, ascending triangle on the 4-Fahor chart. Every touch of resistance gets met with higher lows. The May catalyst, 2 things. First, a potential S&P 500 inclusion rumor is resurfacing. Palantir now meets the profitability requirement. Second, their AppCon event is scheduled for May 21st FA, and last time they held that event, the stock ripped 18% in 3 days. The volatility here is insane, but the upside is even crazier. So I want your prediction. What is your personal price target for Palantir by the end of May? Are we hitting a new all-time high above $27.5? Or is this a bull trap that falls back to $18? Drop your number below. I'll be hearting the most logical ones. FA, not the Moon Boys. And listen, FA, a lot of experts are calling this a bubble. But the revenue growth says otherwise. If you believe in the long-term vision of this company, FA the AI operating system, for the enterprise FA type bull in the comments. If you think it's overvalued and the valuation is disconnected from reality, type bear. Let's see who's winning this debate in this community. I'll be reading. Now FA stock number 3. This one is different. Most YouTubers won't mention it because it doesn't have trending hashtags, but it's the biggest position in my personal watch list for May. Stock number 3 is Vertiv FA ticker VRT. If you haven't heard of this company, don't feel bad. Most of Wall Street's coverage desk didn't know about it 6 months ago. Here's what Vertiv does. They make thermal management and power infrastructure for data centers. Every AI server, rack Fay, Nvidia, AMD, whoever Fay generates massive heat. Vertiv sells the cooling systems that keep those chips from melting. In the last two earnings reports, Vertiv posted backlog growth of 36% and 42% respectively. Their customers are hyperscalers, Fay Microsoft, Google Meta. And here's the hidden part. Vertiv recently signed a multi-year exclusive deal with a major chip manufacturer for next-generation liquid cooling. That hasn't hit analyst models yet. The May Catalyst, their investor day is on May 15th. They're almost certainly raising long-term guidance. Technically, VRT just corrected 26% off its all-time high Fay completely, due to macro rotation, not company-specific news. That's a gift. The 200-day moving average is sitting at $64, and price is holding a full $4 above that. The risk-Fay reward here is asymmetric. Stop at $62. Upside to $98. That's nearly a 3 Fay to Fay on reward Fay to Fay risk ratio. This is the one Wall Street isn't talking about yet, and it's the biggest position in my personal watch list for May. Do you think this hidden gem has more potential than the first two stocks I just mentioned, Fay, Amazon, and Palantir? I'm serious. If you want me to do a dedicated 20-minute deep Fay dive video on just this company, Fay, its full financials, competitive moat, and exact price targets, Fay, drop a yes in the comments. If enough of you do, I'll record it this weekend and release it before the May 15th Investor Day. I'm not asking you to buy anything. I'm asking you to do your homework. Now let's wrap this up. To be very clear, the market doesn't wait for anyone. While others are paralyzed by fear of a May crash, the most successful investors are making moves based on data, Fay, not emotions. These three stocks represent a unique window of opportunity as we head into the summer, but each one carries risk. Amazon could get hit by a macro sell-off. Palantir is volatile enough to shake out even experienced traders. Vertiv is a smaller cap and can gap down on any news. You need your own stop losses and position sizing. That's not me being lawyer cautious. That's me respecting the reality of the market. Always manage your risk. Never go all in on a single ticker. We covered a lot today, Fay, from the cash flow monster to the hidden gem. If this video helped you narrow down your May watch list, do me a quick favor, hit the like button. It helps the algorithm show this research to more investors like you, Fay, not the hype channels. And if you haven't yet, subscribe and turn on all notifications. You don't want to be the one reading about the rally after it's already over. I'm your channel name. Stay smart, stay disciplined, and I'll see you in the next video.